Hey guys, Nick here from Nick's Taxes. Welcome back to the channel. Today we're going to look at Canada's 2020 Fall Economic Update. I went through it all and just want to highlight some things that I think are important to touch on that will affect you as a Canadian and a Canadian taxpayer. So before we get started, if you're new to the channel, welcome. I make videos on Canadian tax, investing, and finance. So if that's of interest to you, I suggest you subscribe. And as well, if you get value out of this video, I'd appreciate dropping a like on this video. Today is, again, we're going to talk about the fall economic update and some of the major things that I think are worth bringing up, so that way you don't have to bother taking a look at it yourself. But basically, it comes down to two things. We're looking at some new taxes and a lot of money being spent. First thing is Canada's looking at spending between $70 and $100 billion in the short term to help spur this post-pandemic economic recovery. We're going to be in a deficit of about $381 billion by the end of March 2021. And, what does that mean for you guys? It means there's going to be some more money coming your way in the way of family support. So if you are a young family and you have young kids at home, you might be aware of the Canada Childcare Benefit, also known as the CCB. This is for families young families with small to moderate sized level incomes. They receive checks every quarter or whatnot, depending on the income, to help pay for the costs of having a family and having small children. So right now, based on this economic update, Canada is looking at increasing this by about 20%. So you could earn up to $1,200 for each child under the age of 6 in 2021. Families that qualify for the Canada Child Care Benefit and earn an income of $120,000 or less will get the money in 4 payments of $300 each. Canada Child Care Benefit is a tax-free benefit, which is nice, unlike the CERB or the CRB, which is taxable. And this is something that you can apply for just by filing your taxes. So this is one of those reasons, if you're looking at not filing your taxes, or if you say, I didn't make any money, this is one of the reasons why you want to file your taxes. As a young parent, you want to file your taxes to let the government know what your family income looks like, so they can calculate a payment or some sort of benefit, just like this child care benefit. So if your income is under a certain threshold, you can qualify for a certain amount of child care benefits. And again, you can re-qualify for these benefits by continuing to file your tax return. If you're new to the country this year, you can apply for this separately. You can go online to Canada's website, search the Canada Child Care Benefit, and you can look at some different ways to apply for this benefit before you file your first tax return. So what happens is it's based on your prior year's income, and payments start coming out in July based on the prior year's income. So there's a little bit of overlap there, but yeah, very good news for if you are a young family. Also, because they've been so popular and they're mandated mostly everywhere in Canada, masks. Masks are something that we have to pay GST/HST on. This new update here says they're going to slash the taxes on masks. If you are aware of how taxes work on sales tax, most things that are deemed essential are not taxed. So if you go out for a bag or gallon of milk, wherever province you're in, there's no taxes on that. Whereas, if you go out and buy a shirt or some other sort of food that's not really deemed essential, there's extra taxes on it. So masks, we're looking at removing the GST, HST, and they're saying that this is going to cost $95 million over 2 years starting in the new year. So that's a lot of masks that they're taking into consideration. Speaking of the pandemic and wearing masks, you've probably been at home watching things like Netflix or accessing different digital services. Well, Canada is finally stepping in to start taxing foreign-based companies selling digital products or services in Canada. And these companies are going to be required to register for, collect, and remit the GST, HST on their taxable sales. So Apple Music is a company that has already had a permanent establishment in Canada and started doing this a few years back. I know they were pretty upset when they had to do that, and were actually considering moving out of the country. So obviously they didn't, they're still here. But looking at companies like your Netflix, your Spotify's, it's going to be interesting to see what this looks like. I'm sure there's a lot of disgruntled executives in this area because they're going to end up paying a lot of money in tax. Canada's thinking this is going to boost our tax revenues by 1.2 billion over 5 years. So this is not a small amount of change here. This is a big deal. What's likely going to happen is for your Netflix account, for your Spotify account, anything like that, you are going to be the one paying some HST, GST on your products that you're buying and for your services. So look for your subscriptions to increase because you're going to be paying some Canadian taxes. Positive news though, as a Canadian taxpayer, a lot of people have been working from home, and so there's been a lot of talk about what it's going to look like in terms of home office deductions this year and tax deductions for working from home. There hasn't been a whole lot of news coming out regarding what that's going to look like because there are already certain conditions regarding a home office that have been in place that are pretty strict. And so a lot of people, even though they have been working from home, the rules that are currently in place will make a lot of people ineligible for these work from home office deductions. However, Canada and the CRA will now allow Canadians with modest expenses to claim up to $400, that's a tax deduction from working from home, without keeping a detailed account of their expenses. So I'm not sure what that's going to look like yet for this year, but I will let you guys know as we get more information. But I assume if you do have a home office, $400, they are not going to audit anything at that price range or less in terms of home office deductions. So if you've been working from home and you want to deduct $400 from your office expenses, Canada's probably not going to bat an eye on it this year. So we'll see more information on that to come once tax season rolls around. So stay tuned for that. You're going to want to subscribe so I can give you those up to the minute details. Also, if you work for a company with employee stock option grants, the government is placing a new $200,000 annual limit on employee stock option grants that can qualify for the employee stock option deduction. The limit will be based on the fair market value of the shares underlying the options at the time in which the options are granted. The move is expected to increase government revenues in the form of taxes by about $200 million. So if you have stock options, not the best news there. Also, in terms of short-term rentals, I'm looking at Airbnbs. They are also going to be starting to charge HST, GST. Now, if you are a short-term rental owner with your sales over 30,000, you are already doing this. But if you're just a small mom and pop type thing and you have an Airbnb, regardless of how much you bring in from that rental income, you're going to be responsible for collecting and remitting those taxes. So again, if you're a consumer, what's probably going to happen is you're going to pay a little bit extra in tax when you purchase your Airbnb rental. Now, there was a lot more that was discussed in the fall fiscal update, but those were some of the highlights that I think were worth bringing to your guys' attention and I think will directly impact you the most. If you want more information on what was going on with the fiscal update, please let me know and I can make another follow-up video going into more detail on some of these things or talking about more of what was discussed in the fiscal update. But that's all for me for today. Again, if you got value of this video, please hit that thumbs up button. I'd really appreciate it. And I will see you guys in the next video. I'm Nick from Nick's Taxes, and as always, happy taxing.